Hello and welcome to the Crypto Beat. My name is Kelvin Sparks. This is my co-host Tim Copeland, head of growth at The Block. Joining us today, we have friend of the show, policy expert in the newsroom at The Block, Sarah Wynn, and Chris Elias, founding partner at Nakamoto Legal. Welcome to the show. How are we doing, guys?
Good. Moto Legal, Kelvin.
Sorry about that. Got confused by the two. My apologies. Moto Legal. On today's episode about HR 3633, Digital Asset Market Clarity Act of 2025. So to kick it off, really, I want to add some background to the conversation. It's been a monumental year for crypto legislation. So in your two expert opinions, how much progress have we really made this year with respect to clarity on the crypto market?
Yeah, I could kick this off. I guess my general take is it's been really positive, of course. The initiative from the current administration has addressed some of the concerns from the previous administration. And what I would really sort of commend this administration on right now is they've really identified the gaps in the law without being too heavy-handed. So we've had the Genius Act, which has passed and is coming into effect, which is really exciting. And that was a clear and obvious sort of gap in the law, in my opinion. And now with the Clarity Act as well, we're seeing that the market structure is sort of coming into effect as well. And currently, the way it's written, it's really exciting for the US and the sort of legal framework that's being applied to the blockchain space.
Yeah, and just going off that too, yeah, we saw Genius pass during the summer, and I feel like that was a really big moment for the crypto industry because it's been a lot of effort, I think, from the industry to just get a crypto bill, like just even on the federal level, out there. And now the focus has been on crypto market structure with Clarity that passed out of the House also during the summer, and it had some bipartisan votes. And so now the focus has really just been on market structure, and I think. Maybe we'll get into it too a little bit later, but just seeing how different things affect now market structure with like the government shutdown, what that means going forward. Because I think there was hope that there would be votes and markups even at the end of, I think it was the end of September or towards October. And that just hasn't happened quite yet. But I think it's still sounding like there's momentum there to get something done before the midterms.
Understood. And before we get to the Clarity Act, I'm kind of curious, since you both touched on it, what have been some of the biggest doors opened by the Genius Act from your perspectives?
Yeah, I can kick this off. The Genius Act has really allowed for these stablecoin issuers to sort of issue their products in such a way that gives the market a lot more confidence as to how they run their operations. So, you're seeing the sort of large incumbents and issuers with the greatest market share really jump on this opportunity to sort of be market leaders in the space. So I think that's what we've seen immediately after the Genius Act has sort of passed all the way through, and again, it will come into effect soon. But that's one thing. And then the other thing that I'm seeing more from a market perspective is the start of a mass consolidation of all these stablecoin issuers. So a lot of the smaller sort of issuers that have some market share are sort of being snapped up by some of the larger players in the space. So we're going to see a lot more of this market consolidation going forward.
Just wanted to ask a sort of dumb UK question. With sort of the names of these acts, like Genius Act, Clarity Act, what sort of like, where does that come from? Is it that everything needs a certain branding to sort of convince everyone to get on board with it? Why do they have these sort of funky names?
I feel sorry. Oh no, you go ahead.
No. Okay, sorry. I was going to comment. I was going to comment more from an Australian perspective as well. So I'm Australian background, and Tim, you and I sort of come from a similar sort of context. Australians, British people, are a little bit more modest. US people, a little bit more have a flair for marketing. So I think that's where it comes from, in my opinion. So that's sort of my general take on it. But I'll let Sarah give you a more sensible answer.
I don't know if mine's more sensible, but I feel like the short answer is I feel like lawmakers really like a good pun or like a good joke. And so even too with like, there was also the Stable Act that was going out there too. It was both stable and genius kind of going forward. And so people are making jokes like calling it the Stable Genius Act if you were to combine the two and stuff like that too. So I think they also just like they like something punchy. So I think that's maybe the wording on that one.
So given there's good branding around it, what actually is the Clarity Act?
Sarah, I'll let you go first this time.
Yeah. So it basically an all-encompassing, like regulating the market, regulating the crypto industry as a whole. It kind of gives jurisdiction over to the two agencies, the Securities and Exchange Commission and the Commodity Futures Trading Commission, giving more to the latter, the CFTC, and giving them more jurisdiction there. It requires digital asset firms. It requires certain disclosures from them. There's also some language around segregating like customer and corporate funds. And so it's pretty much all encompassing and just kind of figuring out kind of which agency should kind of take jurisdiction over digital assets are kind of like the main components there.
Yeah, perfect summary. And I'll add to this also by saying one of the more common misconceptions of the Clarity Act, since it's been sort of publicized, is that great. Now we have a new set of regulations that will supersede the securities law in the US, which is actually not the case. It just sets clear boundaries on when certain types of businesses and products fall in the remit of the CFTC, and when certain types of products fall into the scope of the SEC and the securities law. So the questions of whether or not a token or a product is a security is still going to be a question going forward. Now, though, we have a lot more clarity, which is a big win, in my opinion.
Understood. And I guess, Chris, if you could expound, it'd be great. What actually is at stake here if this does come into law?
Yeah, I think maybe the way to look at it is, what do we set to gain as an industry, and what does the US in particular set to gain? I think, quite a lot is at stake here, and the US can gain quite a significant amount of market share and talent, back, bringing people back from wherever they went to escape the sort of particularly onerous laws in the US, to come back and do business back in the US and issue products and create businesses from the US again. So I think keeping the talent, keeping the economic activity from this industry into the US is what the US sets to gain, and it's what's at stake here if they mishandle it, I guess. But from everything that I'm seeing, it's looking quite positive for the US again. I know personally a lot of projects that I've been advising who have US persons sort of at the founding level, who've had to sort of establish entities offshore to sort of avoid some of the reach of, or the overreach of certain regulators in the US. Now the sentiment is, hey, we're sort of back open for business, and we're keen to kind of move operations back over to the US again. So already we're seeing that type of sentiment and that type of activity. And with the Clarity Act sort of coming into effect, and from what it looks like, if it continues in this direction, it will definitely capture a lot of the talent and business activity and bring it back over to the US.
Understood. And sorry, Sarah, do you want to add to that?
Yeah.
Please?
Can I ask a quick question then too? I guess with market structure, I think they're trying to look to see if it can get done, but there's just been a couple deadlines that they just haven't been reached. Do you sense like a sentiment in the industry of concern if market structure doesn't get done, and kind of what does that mean for businesses going into the US or back out?
Yeah, it's a good question. I don't see concern. I think there's quite a lot of confidence that this legal framework will pass and will come through. Although what it's already shown the industry is the government's intention to sort of is the government's intention on how they're going to regulate this industry and how they view products and services in the industry. So I think that has already provided quite a lot of clarity, without the law being passed. So the confidence in the industry is quite high that this will sort of push through. And if for some reason it's delayed to some extent, I don't think that'll stop any of the the interests or any of the activities of these businesses sort of moving back to the US. I think, again, the sentiment is strong across the board. And also you have to take into account that the change in the style of enforcement of the law, even as it currently sits, has allowed the industry to feel more confident again going back into the US. So yeah, I don't see I see the sentiment being very high, the confidence level being very high, and I don't see even a delay in the sort of the rollout of this legal framework. I don't see that dampening anyone's mood anytime soon, unless there's some sort of dramatic backflip, which is always not out of the question.
Understood. And Sarah, how has the bill actually evolved over time? I know you've been keeping up with it quite closely.
Yeah, so we saw clarity pass on over the summer. And then that has just kind of stayed in the House. And there was talks about maybe the Senate would just take up whatever the House version was. But the Senate Banking Committee, so there's two different committees then that would need to write the bills, the Senate Banking Committee and then the Senate Agriculture Committee, because one's focused on the SEC, one's focused on the CFTC. And so that's how they would decide the jurisdiction and everything. But they kind of went on their own path and introduced a separate bill that does very similar stuff. It has some different components that's not within clarity. There's a new term called the ancillary assets that basically dictates whether something's a security or not. And so the Senate Banking has their version. And so that's kind of been what's moving since the summer. But they haven't yet gotten a hearing to vote on the bill. Which I think the chair of that committee, Tim Scott, has been wanting to get that done. But there's been a little bit of a gridlock too with Democrats. And then the word is that the Senate Agriculture Committee is set to introduce their draft of a bill soon. I keep hearing soon, so maybe that'll be in the next couple of weeks or so, because they would need to be both. And then, so that's where kind of movement has been since clarity.
Understood. I guess, what have been the past issues with respect to U.S. legislation in the context of digital asset market structure? Just to kind of give context as to how we got here.
Yeah, I think since the Trump administration came in, seeing that now the House and the Senate are both led by Republicans, there's been more of an effort to get crypto market structure bills done, or Genius, like we saw over the summer. I think in the past, it's been Democrats, are sometimes a little bit more hesitant towards crypto. And so even to the past chair of the Senate Banking Committee, which is very pivotal in order to pass these bills, he was not, it was Sherrod Brown. He was not a huge fan of crypto, so you just didn't see a lot of movement. But I think in the wake of that, we saw states kind of move ahead with their own laws. But I think definitely this past year has been a lot of momentum.
And I guess, Chris, since you're working with projects themselves, how have they suffered as a result of not having clarity within the crypto market in the US?
Definitely. At least historically, projects have definitely sort of, had to bear the cost of this lack of clarity. One of the things that you have to do as a lawyer is advise your clients, not tell them what they should and shouldn't be doing. So you have to advise them on what the law is. It always pains me to sort of leave the client conversation or any sort of advisory note or call or opinion with, this is a super ambiguous area of law, which there's no clear precedent and there's no clear even indication as to how the regulators will look at this particular situation. So leaving your client with that sort of ambiguity at the end of a call or at the end of a specific project isn't a great experience for anyone, for me as a lawyer and for the client themselves. They kind of go off maybe a little bit more knowledgeable as to how to avoid certain things, but also there's this sort of degree of doubt in their mind as they sort of run their business. So what some projects have had to do is they've had to relocate and strategically establish entities in other jurisdictions where the laws are more favorable, or the laws are they don't even exist, and then the regulators, as by extension, don't give them a hard time. So they've had to move into some of these jurisdictions, which has allowed the founding team to sort of operate with a bit more confidence that they're not going to breach any of these sort of onerous laws, and which has been sort of okay. But the cost of that, and this is where the projects suffer, is again they've just had to, even put like physically themselves having to relocate in certain jurisdictions where they would prefer to stay in the US, as an example, or in some cases, again, sort of go to a particular jurisdiction which doesn't have the best credibility from a global perspective. So they would much rather do it in the US, but the uncertainty of how their business will be treated in the US has just forced them to has forced them to move elsewhere. So I think there's been a definite cost on projects as a result.
Yeah, this is something that I've sort of observed over the years when I was a journalist. There was been a few sort of huge shifts. I think just there was this huge exodus around the sort of once you start getting airdrops, and there started to be concerns about securities and people getting like the Wells notices. There was that sort of big exodus. Everyone wanted to get away. Then I felt like there was a shift back. Maybe my timelines might be getting confused. It's been quite a few years. But when China banned mining, that sort of at least shifted the sort of Bitcoin mining industry back to the US, which felt like a big shift the other way. And then you had sort of Trump, getting rid of Gensler and saying, okay, we're open to business now. And I think you've had quite a cautious shift backwards with sort of potential projects. But I think they're still waiting on this legislation before they can actually feel safe in doing anything. And sort of crypto moves so fast, they don't have time to wait around. So I don't think we've really seen the full move back to the West. But do you sort of think that's coming?
Yeah, I think it's coming, and I think it's necessary too, because a lot of these projects would move into these sort of, less, let's call them, to a euphemism here, less credible jurisdictions, and they would run a legitimate business out of this jurisdiction purely because they don't know how the regulator will treat them in the US. Other businesses that are in these types of jurisdictions as well are also set up there for more nefarious purposes, where they're sort of not running as legitimate businesses as some of these legitimate companies. So they all get lumped into the same bucket effectively. And unfortunately, it's allowed, there's been a confusion of which projects are serious, like that actually create value, and which are the projects that are just trying to capture some portion of the market through some pump and dump related activity, or name another type of scam or quick win type of business. So that's been the unwanted byproduct of all this, is these companies have moved offshore, and now we don't know, this otherwise legitimate company is now being viewed as a potential high risk company to deal with. So they don't get taken as seriously as what they would otherwise if they're in the US. So I think there is a strong desire to move back to the US. There's a strong desire to establish these companies in more credible, more regulated jurisdictions like the US, UK, UAE as an example as well. So all these jurisdictions are more appealing for the serious founders. So the desire is definitely there, but it's just, again, what regulatory framework do they need to comply with? That's always going to, that's a huge factor for them to consider. And again, I think what the US is doing right now with the Clarity Act and the Genius Act is they've addressed the real key deficits in the law as it relates to this industry. So again, I give full credit to the administration for really identifying what those gaps are and addressing them.
Chris, you actually mentioned something on the advisory side when we were touching on that maybe a couple minutes ago. I was curious, how have projects utilized law firm summaries to guide them in the midst of ambiguity?
When you say summaries, do you mean like articles, publications, or do you mean like the legal opinions that are, the common collateral?
I was thinking like legal opinions, but if you could touch on the articles and summaries as well, if people operate based on those, that'd be cool too.
Yeah. I mean, the articles and sort of public facing information as it relates to this industry is somewhat helpful. I know, because I've written some articles and I've created some of these types of marketing materials. You can't be as open as what you would like to be, and you can't be as detailed, and it's not that helpful as a result, because again, you can't be too prescriptive in your analysis of a set of laws, because you'll be liable for that as a lawyer. So you have to sort of be ambiguous and sort of just comment purely on the facts. And those articles and public facing materials is nice enough to give clients and the industry a general sense of what's going on and what they should be aware of, but it doesn't help them because it doesn't relate to their specific project. So now going to the next level of getting the legal opinion from lawyers, which is still a common practice that happens today. It's still required by a lot of exchanges, financial institutions, etc. Like, this is a very important document for a lot of projects to sort of obtain. Is this allows the law firm that you go to again deeply understand the project, the services that are being provided, as well as the products. And in particular, it's a token that's usually on offer, but in some cases, it's related services, blockchain related services. So allowing a law firm to fully understand the detail. If you again go with lawyers who understand the product side as well as the legal side, then you can really have a more thoughtful analysis on and a better understanding as to how the products and services offered by the project actually map to the existing laws in the US or whichever jurisdiction. So the legal opinion is very helpful, and it should, I can only speak for the opinions that I write, it should provide a lot of guidance for the projects on what to look out for as well, and what areas to avoid. And it should also say if the project goes outside of the scope of this understanding of the products and services, then here's an additional consideration to factor into your operations. Because quite oftentimes projects go in, they want to avoid a lot of the sort of particularly onerous legal frameworks and legal obligations or regulatory obligations. And so they seek the lawyer's opinion on, okay, how best do we do this? And I think if you do that, it's not a great recipe for success, because the lawyers are going to be super conservative and say, okay, well, strip out 70% of what you want to do and just do this thing, which renders the project pretty valueless oftentimes. So I guess the best way to do it is for the project to come into the law firm, explain what they want to do in an ideal state, and then have the law firm properly understand what they're trying to do, and then map that against the regulations. That is still a very useful tool. And even with the Clarity Act and the Genius Act, sort of coming into effect, this document will still be a pretty critical document for any blockchain project, because while we have more clarity as to where these projects sit within these the legal frameworks, it's still not the easiest thing to figure out sometimes. So yeah, there's that.
Well said. And shifting gears a bit, Sarah, I'm kind of curious, how have the political parties either accelerated or stifled this bill coming to pass? You've touched on it, I guess, really quickly earlier in the conversation.
Yeah, I think it's been really interesting just to cover and watch, because I think in the past, some Democrats were very interested in learning about crypto, but I would say a lot maybe weren't so into it. And so there's been a couple. I mean, obviously, one of the big ones is Trump's crypto conflicts of interest when it comes to the industry and how that affects bills. That even came up during Genius, where there was concern among Democrats, where they wanted to get a provision in the bill that said that Trump or any future president couldn't profit off of different crypto ventures, and there's concerns around World Liberty Financial. And I think Genius still passed, but I think that conflict of interest part is still going to be a big concern for Democrats going forward, and still is. And there's little things that happen too throughout. That's a concern, even with Trump pardoning CZ the other week. Some Democrats definitely, I think they'll bring that up during hearings and when they're talking about it, just because they see that as like another conflict of interest concern, and they're kind of looking into that as well. Other parts too, where I think politics could get involved or just kind of change the dynamic. The Democrats also, there was a document that was, I think it was leaked talking about what Senate Democrats, how they wanted to regulate DeFi. And that got a lot of blowback from the crypto industry, which said it would their version of regulating DeFi would eventually like kill it in the US. So there was definitely some concerns there. So it's just kind of interesting to see how that will all kind of come about. So after that document was leaked, there was Senate Democrats that got together to chat about it and talk with the industry. And then that was scheduled. And then I think Republicans decided to hold their own meeting with the crypto industry that same day. So that was a couple hours afterwards. So that was kind of interesting. But I think there's just still a lot of discussions. And I think some Senate Democrats are wanting to really get on board and understand and talk with the industry. And I think there's still concerns there, though, with conflicts of interest.
I'd like to comment on the conflict of interest part because it's pretty interesting, obviously. But I'll explain it or I'll comment on what's happening from that perspective and how that sort of impacts the real world. A lot of projects, and this is probably a good platform to sort of notify people of this, but a lot of projects see what Trump is doing and the Trump family is doing in relation to crypto and think, okay, great, it's open season, we can do what we want. One thing that I advise clients on repeatedly, unfortunately, they sort of get carried away with this idea that everything is fair game now. They are not part of the Trump family as well. So if they're going to just copy the playbook of the president, for example, sure, like you can sort of go on the basis that, okay, if the president's doing it, so can we. You're also not the president, and you also don't have the sort of pull that the president and his family has. So I would just avoid that way of thinking altogether. The law is still the law, and again, you don't have some of the you're not the beneficiary of a possible conflict of interest. Let's put it that way. And the other thing that you mentioned, I think was interesting as well, is sort of the intention or some desire to regulate DeFi. While it seems like the Clarity Act in the current form and the Genius Act in its with the way it's written, it doesn't seem to overstep at all. I mean, in terms of the way these frameworks have been drafted, you can tell that the administration and the drafters have actually have a fairly good understanding of the industry and have drafted this very carefully, not to overstep and only address gaps in the law, which again, I would give the administration full credit. Even other sort of jurisdictions, globally speaking, have they've come out with virtual asset or crypto asset specific regulations. In my opinion, they have gone about that in a heavy-handed manner and approach, where they've just said, okay, if you're doing anything crypto related, here's a set of laws that you have to comply with. The US deserves a lot of credit for not doing that, and it'd be my hope that it doesn't. So again, from what I'm seeing from the Genius Act and the Clarity Act, they've only addressed some really key concerns and crucial gaps in the industry that the law just doesn't account for. I just wanted to make that comment as well.
No, thank you for illuminating. And one of the things I guess I'm kind of curious about as we're talking about this is, how is the government shutdown impacting the future finance? It feels like it's the second longest, coming up on the longest potential government shutdown.
Yeah, I can speak to just even how it affects working on bills up on the Hill. I think we're now at the longest. Today's Thursday. I think we're at the longest government shutdown, with the last being during the last Trump administration, I believe. So it is really interesting. And I think what I'm hearing is that with a lot of these bills, usually you try to get the lawmakers and staff, try to get input from different federal agencies like the CFTC and SEC, but they're not really able to do that right now, since both of those agencies have a lot of people furloughed and are not working. I think it's like 90% of people at the SEC are not working right now because they can't. So I think there's not a lot of expertise, and this is like routine for staff and lawmakers to get that expertise from those agencies. So they're not able to get that right now. And I think with lawmakers on the Hill, they're obviously like focused on the shutdown right now. So that kind of, and it makes sense, it kind of deprioritizes crypto. So it could mean that bills then are kind of pushed back until, the beginning, until January, or because there's not a lot of floor time now to get votes in. And so I think it kind of just pushes back when a bill could be passed if it is passed.
Yeah, just to finalize on this point as well, the unwanted sort of consequence of this is it's potentially quite negative to the industry, because then you get these type of opportunistic projects knowing that the government is sort of at a standstill, and knowing that the SEC, for example, being the sort of primary enforcer of the securities laws, is sort of under-resourced and unable to, or not able to sort of enforce the law, could open the US up to some pretty, harmful businesses sort of operating in the space where they otherwise wouldn't have. So that's the sort of really negative consequence of all this as well. Not just the law being, sort of stopped from progressing.
Yeah, I think too, like a lot of like investigations, I think that like the SEC has like that handbook where the only things they're focusing right now in terms of investigations are going to be like really emergency situations. That's a good point too that you have, that everything's kind of put on pause, and we don't know how long that'll be for.
So, given there's so much uncertainty in you guys, guess way well more informed opinion than mine, like when do you expect this to pass?
Expect a market structure bill to pass?
Yeah.
Yeah. I think it's a really interesting question. I think in the past people would have said sooner than later. But now I feel like the Hill's kind of in a tricky spot because midterms are coming up. And so when midterms come up, lawmakers really just focus on their, getting reelected, or they focus on campaigns. And so there'll be a lot of talking points. If Democrats don't, if there's some tension there with, conflicts of interest, they're going to be bringing that up more and like putting that behind their campaign. And Republicans too could do something similar. I think to answer, I think it could be if they're able to pass something before the midterms, that's great. But if it's too close to that, it's harder to get something passed.
Yeah, I'm more skeptical. But although this administration and the way they've been able to move, especially with the Genius Act and then stand up and pass this the Clarity Act of the Senate, was really, really it took me by surprise. So they've surprised me very positively, and that sort of gave me hope. But then now with the shutdown, I don't know, I have a lot more skepticism. But I guess you've got to look at the sort of motivating factors as well. It's really hard to know how the broader the broader government sees how they view the Clarity Act, and whether or not it serves some of their strategic interests as well. I think the Genius Act made a ton of sense to sort of get stood up and get passed. That, to me, I think that should have happened many years ago, in my opinion, given where the industry is. So that made a lot of sense, and I could see why that passed so quickly. But the Clarity Act, again, I don't know where that sits, on the government sort of strategic importance priority list. So, yeah, it's really hard to predict. But again, I'm a little bit more skeptical when it comes to government efficiency. So.
Understood. And I guess, sorry, go ahead, Sarah, please.
And I think too with Genius, that was like a much smaller, like in terms, it was still a big bill, but it was much smaller in terms of like a crypto market structure bill. Like that's such a huge thing. So I hear you too. I think that's it's a different setup than Genius for sure.
Okay, so I guess now that kind of changed my next question a little bit. I have to put my hypothetical hat on. But that being said, does this mean that the crypto capital of the world meme that you've been hearing a lot of these power brokers speak about and just kind of yell from the mountaintop about, how much realer does that become of a thing if this does come to pass?
Yeah, good question. I've long held the belief that the crypto capital, let's sort of just focus on this right now, is really where all the talent is and where the money is, I guess. It's hard to even it's hard to even identify where that capital might be, because of the global nature of crypto. I mean, where are any of these companies anyway? They're sort of operating on a global scale. as it is. Where is all the talent? Where is all the economic activity? Yes, it has sort of been diverted offshore, but who's benefited the most? I would, I don't have any sort of solid facts to back this up. I'd like to be fact checked on this, and I'd like to talk about this. But my general feeling is that a lot of US people have still benefited from the crypto activity to date, and I've always thought that the US is still the crypto capital from a pure like talent perspective, economic benefit perspective. At least the individuals are, maybe not broader economically. The broader economy hasn't benefited, but the individuals certainly have. So, and the companies as well. That is, the sort of market leading companies. A lot of them are US or have some strong link to the US. So I still think the US has always maintained that, and I think it will always maintain that. That's my sort of view. Maybe again, people can challenge me on this, and I'm happy to be wrong on this, but I just think with this law coming into effect, it'll just solidify this for sure, and it will allow people to sort of more openly operate their business from the US. So I think it will definitely cement this. But if the US isn't careful and they drag this out too long and they keep making things difficult for these projects, then I definitely see a almost certain shift to other jurisdictions. Again, I'm currently in Dubai right now, and the UAE has been sort of really bullish and aggressively trying to capture this talent. You have some European countries that are trying to capture it as well. You have the Cayman Islands, which has sort of captured quite a lot of these businesses as well. So again, you're starting to you're seeing this sort of challenges to the US here. But yeah, again, I don't think the US can sort of drag this out too long, because it'll eventually flip and people will just sort of permanently move out and set up their businesses elsewhere. A long answer to that question.
All good. Sarah, any final comments on your end?
No, I think that's really interesting just to see kind of where things head with legislation and what that means for companies if they're coming into the US, or if they realize, maybe, no pun intended, the clarity isn't there, so maybe they'll back out. And so I think it's all really interesting to think about that.
Well said. And I guess that's all the time that we have for today. So I want to thank Chris and Sarah for joining us on this episode. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the blog. Thanks, and see you next time.